Welcome all. This is question number 1, 2019 Strategic Management Accounting Past Paper HNDA SLIATE. Let's see the question. The KPL Product Limited manufacture two products A and B. For preparing the budget for the year ending 31st March 2018, the following data are relevant. Statement of financial position as at 31st 3rd 2017. They give financial position. In financial position, they give non-current assets, current assets, equity, and current liabilities. Other relevant information: A. Direct labor cost in the finishing department is 3 rupees per labor hour for both A and B. And direct labor cost in the machine department is 1 rupees per labor hour for A and 2 rupees per labor hour for B. The machine department and the finishing department are concerned with production. Material X and Y are used in the manufacture of the product. The direct materials and direct labor content in each unit of each product are estimated as finished product content of each unit. A and B. Material X at 3 rupees per unit. For A product, there are need 2 units and 4 units for B, and material Y at 1 rupees per unit and 1 unit for A and 2 units for B. And direct labor, machine department 2 hours for A and 1 hours for B, and finishing department 1 hours for A and 1 hours for B. Information C. The sales forecast as gives as a sale volume of 8,000 units of product A and B, 5,000 units of product B at expected selling price per unit of 30 rupees and 40 rupees respectively. And information D. Factory overheads are applied on the basis of direct labor hours. At the expected output level, the following costs are forecast. And fixed cost, machine department and finishing department fixed cost 14,000 rupees and 6,000, repairs 4,000, 1,000, and they give rates, depreciation, power, variable cost per labor hour, and inventory forecast, raw material X and Y, estimated closing stock and open stock, finished goods A and B, estimated closing stock, open stock, inventory forecast, raw material, estimated closing stock, and opening stock. Other relevant other selling and distribution expenses are forecast at 60,300 rupees. The cost of raw materials purchase, direct labor, factory overhead, selling, distribution, and administration expenses will be met in full in cash. At 31st March 2018, it is estimated that the outstanding debtor and creditors will stand at 50,000 rupees and 16,000 rupees respectively. Tax owing at the beginning of the year will be paid during the year, and profit are taxes at an average rate of 50%. Machinery purchase during the year estimated. You are required to prepare production budget and material usage budget, cost of goods sold budget, and cash flow budget for the year ended, income statement for year ended, and finally there is the budgeted statement of financial position as at 31st March 2018. Okay, first one they ask production budget and material usage budget. Okay, first we find how do we get the production budget and material usage budget. Right, production budget and material usage budget. First they give A and B. We mainly produce product A and B. And unit sales volume, how many sales volume we expected to sell, how many they mention in information C. They mention 8,000 units of product A and 5,000 units of product B at expected to sell. So unit A sales volume 8,000 and unit B 5,000. Next, our opening stock, we already have, it is opening stock 202,000. Yes. Next, we will see what is the estimated closing stock. We normally maintain a stock from product A 2,200 and 1,000 for product B. Right. Now, sales volume minus opening stock plus closing stock. We need to produce 10,000 of product A and 4,000 of product B. Yes, so this is our production budget. Next, we will see how to prepare material usage budget. Now we know we need to produce 10,000 units in product A and 4,000 units in product B. First, we will see how do we produce product A. Yes, they mentioned in information B. For produce product A and B, material, we need material X unit. There are 2 units. There are 2 units of X. We need to produce A. It is at 3 rupees. And for produce product B, we need 4 units in X material. And how many material we need in Y? Material Y at rupees 1 and 1 unit for X for A and 2 unit for B. Right. Now we will find how many units we need for A and for B. We need 2x for produce 1 A unit. For 2 multiplied by 10,000 units. How many kilogram we need? 20 kilogram we need in X material, and we need 4 kilogram for in X material for produce 1 B unit. So we need 4,000 unit B. For that, 4 kilogram multiplied by need to produce unit, it is 4,000. 4 multiplied by 4,000, it is 16,000 kilogram we need for produce 4,000 unit B. Next, we get this one. How many Y material we need for produce 10,000 A? For produce unit A, we need 1 kilogram, and for produce B 1 unit, we need 2 kilogram. So 1 kilogram multiplied by 10,000 units, it is 10,000 kilogram Y. And for produce B1, we need 2 kilograms. 2 kilogram into 4,000, it is 8,000. So total X material we need 20,000 kilogram plus 16,000, it is 36,000 kilogram we need to produce A and B. And we need Y material 10,000 kilogram plus 8,000, it is 18,000 kilogram we need to produce A and B. So next you see how many material we required. X we need 36,000 kilogram and Y we need 18,000 kilogram, and already we have opening stock. How many stock we have? Opening stock 12,000 in X and 2,000 in Y. We need to minimize this, the opening stock, and we need to plus how many how much material we maintain for our company. They mention in this estimated closing stock. We normally estimated 16,000 in units in X and 4,000 units in Y. So this amount we need to calculate our material requirement. So need to purchase 36,000 minus 12,000 and plus 16,000. We need to purchase additional 40,000 kilogram, and in Y, and 18,000 kilogram we need, and 2,000 opening stock minus plus 4,000 kilogram, it is 20,000 kilogram. So purchasing cost, the one unit is 3 rupees. So 3 rupees into 40,000, it is 120,000 rupees. We need to purchase 40,000 kilogram in X, and 20,000 kilogram we need in Y. Y unit is price is 1 rupees. So 1 rupees into 20 kilogram, it is 20,000. So total we need 120,000 plus 20,000, it is we need total purchasing cost 140,000 rupees. So this is the production budget and material usage budget. Next they ask cost of goods sold budget. How do we prepare the cost of sold budget? Yes, cost of goods sold. First, what is the product A and B unit? Product A, X per, it is 3 rupees per unit for X. For one product, to produce one product, we need 2 kilogram of X. They mention it in this cell. Next, so 1 unit per 3 rupees into 2 kilogram, we need 6 rupees for X material, and next Y rupees is rupees 1. We need 1 unit for A1 product. So 1 rupees into 1, a Y cost for 1 A, it is rupees 1. Next, direct labor machine. It is 1 rupees per labor hour for A and 2 rupees per labor hour B. Imagine 1 and B. We need for A product direct labor, it is 2 hours for A and so 1 rupees into 2, it is 2. Next, finishing. For finishing, they mention finishing department 3 rupees per labor hour. So 3 rupees. We need for finishing department product A 1 hour. So 1 hour into 3, it is rupees 10. Next, we will see the B product B, unit X product, sorry, X material, 4 unit, so get the 4 into 3, it is 12, and in Y material we need 2 units for produce E1, 2 into 1 rupees, it is 2, and direct labor machine they mention 1 hours and finishing department 1 hours. 1 hours into 2, because they say moments labor hours for A and product B for 2 rupees per labor hours for B. So 2 into 1, it is 1. So finishing department 1 hour, we need 1 hour. So 1 hour into 3, it is 3. So now we calculate product per product cost. Now we need to calculate 10,000 units of A and 4,000 units of B. Let's see how many units we can, how many cost we have where. So A 10,000 and B 4,000. For find A, so in X unit we need, for produce A product we need X 6 rupees cost. So 6 into 10,000, it is 60,000. Likewise Y for product A we bear 1 rupees cost for Y. So 1 into 10,000 units, it is 10,000. Likewise machine cost 2 into 10,000, it is 20,000 hours we need, machine hours we need, and 20,000 multiplied by 1, it is 20,000 cost. And for produce 1A we need 1 hour finishing department. For 1 into 10,000, it is 10,000 hours we need for produce 10,000 A product. And 1 hour cost is 3 into 10,000, it is 30,000. Unit we expected to produce B 4,000 units. So X cost of B is 12 into 4,000, it is 48,000, and 2 Y cost of B is 2 into 4,000, it is 8,000, and direct labor machine of product B is 2 into direct labor machine hours of B is 1 hour. 1 hour into 4,000, it is 4 hours, and the machine cost of B is 2 multiplied by 4,000, it is 8,000, and finishing department hours is, for B it is 1 hours. 1 hours into 4,000, it is 4,000 hours, and the cost of the B is machine department 3 into 4,000, it is 12,000. Now we can calculate the total cost. It is A and B. X cost of A 60,000 and X cost of B is 48,000. 60,000 plus 48,000, it is 108,000. And likewise 10,000 plus 8,000 18,000, and 20,000 plus 8,000 28,000, and 30,000 plus 12,000, it is 48,000. Likewise the 28,000 for 20 hours plus 20,000 hours plus 4,000 hours, the direct labor machine hours 24,000 hours. 24,000 machine hours, cost is 28,000. Likewise, the A and B finishing department hours, it is 10,000 plus 4,000 is 14,000. 14,000 hours, cost is 48,000. Next, we can get the factory overhead. Factory overhead, they give us, mention here, first on indirect labor to variable cost. We can copy that, indirect labor to power, indirect labor to power, 14,000 to 2,000, and machine department, and finishing is 6,000 to 1,000. Now we can get the calculator of this amount. Then the total of amount, it is 48,000 in machine department, and finishing department it is 40,000. Now we can get the labor hours. It is labor hours is 24,000 and 14,000. Likewise, next we can get the cost per hour. So 48,000 divided by for the hours 24,000, it is 2. 14,000 divided by hours, it is 1 rupees. Next they give, now we find the cost per hour. Next they mention variable cost per labor hours is 0.5 and 1.5 machine department and finishing department. Copy that. Now we can get the total of this 2 plus 0.5 and 1 plus 1.5. Overhead rate is 2.5 and 2.5. Overhead x labor hour is 60,000. And 35,000. The overhead rate multiplied by the relevant hours 24,000. 2.5 into 24,000 is 60,000, and 2.5 into 14,000 hours, it is 35,000. Right. Next we can get the total overhead of department. It is 95,000. How do we get the 95,000? The 60,000 plus 35,000, it is 95,000. Right. Now we find the overhead cost, total cost. It is so. Now we get the total cost. The total cost X, Y, direct labor machine and finishing department, and total cost. The total of this amount 108,000 and 18,000, 28,000 and 42,000 plus 95,000, it is 291,000. Next we need to get the opening stock. The opening stock is 18,000. It give it our financial position. Yes, finished good, it is 80,000. Next we can it is the 8,000 at the 291,000 for find the cost of good. So now 371,000. Next we get the cost of closing stock. How do we get the cost of closing stock? The direct material of A is 6 plus 1, it is 7. 6 plus 1, it is 7. and B is 12 plus 2, it is 14, and direct labor 2 plus 3, it is 5 for A, and both 1, 2 plus 3, it is 5. Next get the 2.5 and 5, it is machine hours. For machine hours, it is 1 hour multiplied by 2.5, it is 5, and product B, it is because 2.5 product A 2 hours, 2.5 into 2, it is 5, and 2.5 into 1, it is 2.5. Next finishing 1 multiplied by 2.5 and finishing 2.5 into 3, into 1, it is 2.5, and 2.5 into 1 hour, it is again 2.5. So the product cost A is 19.5, 7 plus 5 plus 5 plus 2.5, it is 19.5, and 14 plus 5 plus 2.5 plus 2.5, it is 24 cost price is for product B, and closing stock is dimension estimated closing stock 2,200 units and 1,000 units. So unit is 2,200 and 1,000. So now we can need to calculate the cost. 2,200 into 19.5, it is 42,900, and 1,000 into 24, it is 24,000. So now can get the closing stock cost 42,900 plus 24,000, it is 66,900. So the 371,000 minus 66,900, it is 304,100. So 304,100, it is the cost of goods. Right. What they ask next? Cash flow budget for the year ended. Cash flow budget for the year ended. Right. They give opening cash balance in financial position, current assets cash 20,000, and plus cash receipt from sales, the debtors. We need to find cash received from debtors. The opening balance of debtors, it is 30,000, and sales amount 80,000 and 5,000 by 30 and 40. So sales amount 440,000 plus opening stock 30,000, and they mention the closing stock of debtors is 50,000. So 30,000 plus 440,000 minus 50,000, it is 420,000. So it is you from sales, it is 420,000. And creditors opening balance is 16,000, and purchase is 140,000 from and closing creditors, it is 16,000. Final value, it is 140,000. and they said other value, the cost of raw material purchases, direct labors, factory overhead, selling, distribution and administration expenses will be met in full in cash. Okay, down the selling and design. Next, they said tax on at beginning of the year will be paid during the year. The beginning of the year tax is provision for taxation. It is 20,000. And purchase, they mention machinery purchase during the year estimated at cost 40,000 will be paid during the year. Now we can get the closing balance. How do we get the closing balance? Opening cash plus 420 cash receipt and minus the credit value. Final value is 34,700. Requestment D, income statement for the year and year. Income statement for the year. Sales income. Sales is 8,000 units of A and 5,000 units, 30 and 40 prices, and sales income is 440,000 and cost of sales previously we find out it is 304,100, and now we get the gross profit, that's 440,000 minus 304,100, 135,900. Now minus selling expenses 60,300 selling expenses. The mention it in 60,000 selling and distribution expenses forecast 60 and 60,300. Then we can get the profit before tax. Gross profit minus 60,300, it is 75,600. Now we can get the calculate the tax. Tax is 50% profit taxes and the average rate of 50%. The 75,600 into 50%, it is 37,800. Now we can get the profit after tax. It is same 37,800. Now they mention retained profit 32,000. Yeah, total which is comprehensive income 69,800. Right. Requestment E, the budgeted statement of financial position as at 31st March 2018 financial position. Right, we start with non-current assets. The machinery, in financial position, machinery 300,000 plus they say that 40,000 will be paid during the year for a new machine. 300 plus 40,000, it is 340,000, and minus the depreciation 100,000 plus 16,000 plus 4,000, it is 120, and 340,000 minus 120,000, it is 220,000. Then current assets, raw material, it is raw material in closing stock X 16,000 kilogram, it is 48,000, and Y 4,000 kilogram, it is 4,000. 48,000 plus 4,000, it is 52,000. And finished good they mention 66,900. Here they mention in total cost closing stock 42,900 in A, product A, and 24,000 product B, it is 66,900. Then they mention debtors is 50,000. They mention in additional information G, 50,000 is debtors. And cash, we find out cash balance, it is 34,700. And total of non-current and current assets, it is 423,600. And equity, operation ordinary shares, it is 300,000. It is 300,000. And retained earning, we find out retained earning in income statement, it is 69,800. And then current liability, creditors 16,000, mentioned in information G. And taxation, find out tax, it is 50% of profit before tax, it is 37,800. And total value is the same, 423,600.